Hello, this is Derek Izuel, Chief Investment Officer for Shelton Capital Management with the Shelton CIO Minute. Amid mixed equity returns around the world, one region is sticking out heads and shoulders above the others, and that's Europe. The Europe Stocks 50 index in US dollar terms is up 15% year to date, far outpacing anything else in the global markets with the exception of perhaps Chinese tech stocks. Expectations in Europe are for 3 to 4 rate cuts later this year. And this is on top of the 7 rate cuts that have already occurred, including one just last week. While here in the US, we're unlikely to see another rate cut until at least late in the summer, if at all this year. Economic trends in Europe have been positive for the first time in some time. Purchasing manager indicators, which is a key leading economic indicator, is showing some life. And European banks are as healthy as they have been for years. The biggest reason for the rise in European markets has been the potential for the end of the war in the Ukraine. There's extensive debate as to where this war might end, but from an economic and financial perspective, a ceasefire is viewed extremely positively by investors. First of all, the Ukraine can begin the process of reconstruction, and firms in Europe are likely beneficiaries of the hundreds of billions of dollars necessary to rebuild their nation. Given that it seems that the role of the United States in the preservation of a ceasefire is likely limited, European nations are also now forced to increase their defense spending, and we're seeing some projected increases from around 2% of GDP to perhaps closer to 3.5% or 4%. Any such increases are likely accompanied with some infrastructure spending, which will further support European markets. Finally, there does exist the possibility that any such peace treaty will include provisions to resume the flow of cheap energy from Russia to continental Europe, a key hindrance to their economic growth over the last couple of years. Now, there's much uncertainty in these outcomes, but the need for global diversification in investments is warranted now as much as ever, and these recent events could provide a catalyst for that such diversification will pay off. For further information, please don't hesitate to contact your local Shelton Capital representative. This has been a Shelton Capital CIO Minute.